G'day folks, welcome back to Pete's Investing. It's the 19th of June 2024. You can see here, excuse me, the SP 500 and the NASDAQ have risen since our last update. The Japanese Nikkei has drifted sideways and the German DAX has dropped since our last update. Going to our heat map, on the bottom left here you can see the VIX is pretty much neutral on the monthly and weekly CCI 150 trend, but it's bullish on the daily time frame. The US S&P 500 is still bullish across all timeframes, monthly, weekly and daily. The German DAX and the Japanese Nikkei are bearish on the weekly and daily timeframe, and likewise the NASDAQ is bullish across all timelines, plus the other instruments for your reference should you wish to look at those trends using the CCI 150 indicator. In terms of trading, we do trend in the direction of the higher time frame. So if you're trading on the daily, we trade in the direction of the weekly. Or if you're trading on the intraday time frame, like the 1 hour, 2 hour, etc., we trade in the direction of the daily time frame. We enter the trade when the CCI 150 has a fresh breakout from the moving averages, and we close the trade when that CCI 150 breaks back into the moving averages on the CCI 150, but also the price moving averages. And I've got the code for that, or the method used, in a video attached below, and how to draw those indicators should you wish to do that yourself. Looking at the S&P 500 first off, on the monthly, you can see there the CCI is broken above the moving averages. It's still a bullish trend and it's still moving, but notice it's also got a very slight lower highs on the CCI versus higher highs on the price, and that's a bearish divergence. So we've been saying this for a while. We did have another bearish divergence back here and the price fell off with a bit of a retrace. So these divergences can mean a slight retrace, or they can mean a complete retrace further than 100% level, but in this case we don't know yet. It hasn't started retracing on the larger time frame. On the weekly, you can see here we've got another almost double top on the CCI, and we've got a higher highs on the price as well, plus there's also a smaller range divergence there between those peaks on the CCI versus higher highs on the price. So again, we might see a bit of a retrace in the coming days. That's on the weekly. On the daily, it did actually break through this previous resistance at 54.48, and it's now hitting this new resistance at 54.95. So, and again, we're going to consider that a minor resistance, but notice the CCI is still moving higher, so we may see further upside, but again, we need to see it break above that resistance to be more positive and bullish. Going to the hourly time frame, again using the daily here as a reference, we only take trades in the direction of the daily time frame, so we only take long positions. Now you can see here, had you gone long during some of these moves to the upside, when the CCI breaks up, as also the price breaks above the moving averages, that's where you would have taken those trades. So that would have been a nice little area to take a trade there as well. Avoid taking trades when the CCI is dropping off. Wait for it to recover. Taking a long position there, that probably would have drifted sideways. Enter another position there. That would have made a nice little gain. And then you would have been cautious about going long when you start to see the CCI dropping off. Notice the price started dropping off as well. Now notice here that the peak, we've got a new high here on the price, but a lower high on the CCI. That's a bearish divergence, and it's going right out to where we are today. Again, there's that minor resistance at 54.95. We expect it to drop in the coming days. Now I've drawn a little target area there between the 23 and the 38% Fibonacci retracement area. So it's going to probably come back and rest on this previous resistance we had at 54.48. So again, we'll keep an eye on that in the coming hours and days. Next, we look at the German DAX. Now the German DAX is still bullish. Again, it's got a bearish divergence similar to the S&P. So just be careful about going too heavily on long positions. That's on the monthly. On the weekly, we did have a couple of divergences here. This first one fell off, hit our target, and the secondary one's still in play. That's still a double top, and that's reaching new highs. But again, notice the CCI is dropping off even though the price is making new highs. So again, we're expecting that to fall off in the short term, and that's giving us a bearish signal at the moment on the weekly. On the daily, it's been bearish for a number of weeks now after hitting this resistance at 18.936, and there's another little bearish divergence there versus high highs on the price. It fell off, hit our target, and this one's now come and rested on this minor support at 17.949. But again, notice the CCI is still falling off. If we go to the hourly chart, and there's our daily chart as a reference, so we only take short trades here. Again, going back here, you would have taken a short position back here when the CCI is below the moving average, and the price is as well, and you would have closed it out when the CCI breaks into the moving average range. Avoid going long during that period because we're only going short based on the daily trend. So avoid that little move to the upside, and you would have taken another short trade when it broke below again on the CCI, but also the price. And again, choose your own method of exiting. You can take points gained, or you can exit when the CCI breaks in, or when the price breaks into that moving average range. That would have been a nice little trade to make. Again, avoid long positions. Enter another little short trade there. The CCI and the price broke below. Avoid the long positions and then go into another short trade. Notice also when the higher time frame is moving in this particular direction, in this case short, we get more stronger moves to the downside. The up moves are a lot weaker. So that's another reason you should only trade in the direction of the higher time frame. Next, we look at the Japanese Nikkei. Now again, you'll notice the CCI is bullish on the monthly, and that's making new highs on the price chart as well. On the weekly, we do have this bearish divergence, lower highs on the CCI versus higher highs on the price, and we've drawn a target area, the 23-38% level, and hasn't reached that yet. If it starts falling from there, then that'll be our target. Of course, it could go higher, which means we have to readjust the Fibonacci range. That's on the weekly. On the daily, notice the CCI keeps dropping. The price has also dropped, hit its target. Again, these divergences are independent from each other. They're not necessarily related in terms of the same points on the chart. So this was another bearish divergence. Hit the peak, bounced off that resistance at 41.60, and hit our target here at between the 23 and the 38% level. And the CCI has fallen off and starting to level out a bit. If we go to the hour chart, and there's our daily chart as a reference. Now in this case, it's been going sideways, so I'd be cautious about going long or short on this one. I'd like to see it break a lot stronger like it does here when the moving average bands are wider apart, and probably not so much when they're squashed up like this. So I'd probably avoid trading this one until we see this sort of action happening with the moving average bands widening one way or the other. But in this case, it looks like it possibly may fall more into the shorting position. Now you can still trade this, but notice you're probably going to get stopped out or much smaller gains if you do go short, for example, during that period. That's the Japanese Nikkei. Lastly, we'll look at the NASDAQ. Now here on the monthly, it's still bullish with the CCI breaking above the moving averages. And we did draw this Fibonacci retracement previously on our last video. That's where it stopped, and we're going to remove that because that's now made new highs. So we're going to adjust that as well on the divergence, so that those highs are lower than the previous highs, and those highs are higher on the price chart. That's our new divergence, and we take it back to this previous low, significant low before the divergence started. You could have taken it back there as well. So let's take it back to this one. That's assuming it pulls back from where it is today on the monthly. Let's remove that. Now we're going to move that to that new area, assuming it starts falling from today, but we're not there yet. But that's just an early positioning. On the weekly, likewise, we've got our lower highs on the CCI versus higher highs on the price. And the same goes for, now here on the daily, you'll notice the highs on the CCI have broken the previous highs, and that's now invalidated that divergence. So I'm going to delete that off the daily, and I'm going to delete that one off the price chart as well. So, and remove that little rectangle. So it's made new highs, and again, it's hitting this resistance at 19,985 as well. The CCI is still making further upside. So again, only long trades to be taken on this one. Going to the hourly chart, we've got here on the hourly, again, hitting that resistance at 19,985 versus the daily. So we only take long trades only, but notice now we've got a new divergence on the hourly, lower highs versus higher highs. So again, if you're in long positions on this one, you may want to take some of your profits off the table. I'd like to see the CCI moving higher in accordance with the price chart like it was back here, although there was another bearish divergence here as well, which didn't work out. Notice it didn't fall off, and it then started retracing higher. So you want to make sure that the divergence is, or the CCI is moving in line with the price like it is back here, to be consistently taking long positions. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.